Okay, so before we get started, we'll start with the risk of loss disclosure. Everybody should be up to date on that one by now. Do not trade with money you cannot afford to lose. Make sure you take precautions, you respect your rules, place your stops, take profits when you have them, and get out when you have to. Do not force trades in the opposite direction of where price action is heading. Recognize the swing arm is breaking against you. That is the reason to close that trade. Okay, so let me minimize this and let's take a quick look at the, all right, so the 1 hour chart. Okay, the 1 hour chart turned bearish at on Wednesday. Let's open that up right here at 1 o'clock in the morning or 12 o'clock at night, and then started the process of back testing it during the day and then today. Okay, so that is the bucket that we were looking at to follow. We had the high, we have the break, and then we have the bucket to back test into. Okay, so that's where the focus was initially in the morning when the sessions before pre-market session starts. That's your review is to take a look at the charts and then see where price is and potentially where your opportunity would be. Okay, so by looking at the other time frames like the 2 hour time frame, or for example the let me see, where was I? The daily chart. The daily chart also had this trend line that it reacted to yesterday, and the trend was still intact there. Then we ended up having the 1 hour right here, and then we had the approach to back test it and fail. So it's in time, the more you look at it, you eventually start to put the 2 and 2 together and connecting the dots. And overnight, I was up like, I think it was like 1:30 in the morning, and I posted several charts on Twitter about exactly the process of all the charts of what I was looking at that time, kind of getting my mind around for the morning. So I posted several charts from various time frames, just highlighting the turning points and stuff that I was looking at to have some awareness before the session. Okay, and that's the kind of stuff you need to do, and not just show up and look at a 1 minute chart and jump into a trade or not know what to do because you have no direction. So it's not simple. It does take training. It does take practice. It does take time to study and little by little to get your mind around it. So that with that said, let's go back again one more time to the 1 hour. So the 1 hour, we had this line right here, which was respected throughout. So when you look at this type of thing, you want to look at the various charts to see what you find that what other information you can find that kind of gives you support to your decision for whatever trade you're looking to place. So one of those is the volume profile chart. So here's the volume profile chart on a 2 minute setup. And you can see what happened here. Price went all the way to the edge of the upper side of the volume profile and was never able to breach it. Asia or Europe. Then US comes in and it goes back to back test that and fails. By 9 o'clock, 9:30, it drops. So we went from the extreme volume profile top to the extreme bottom of the volume profile in the day. And we ended up in the middle. So if we zoom into this, as the market, I posted this as well early on as a buy. Of course, you're managing your stops as this is moving up. knowing that you're going to the top, or you just sit back and do nothing and wait for this to break. And then either you take right away when it triggers that it broke down, or you allow it to hit the pivot point, back test into the swing arm, and then short it from there. So there was a question earlier from someone, I don't know who it was, and the thought was that why was this a trade? In his view, the comment was that there wasn't enough risk reward to take the trade. Okay, so the issue is with that analysis is the fact that you're looking at the wrong chart. If you're making the decision on a 1 minute chart against the whatever time frame we had below at the time, you lose the big picture view of what's happening. So in this case, for example, what should be done is that you need to look at this from a different perspective. So let me bring the other chart. Where is it? Is it this one? Yeah, this one. Okay, so I'm going to then change this one to display the 1 hour chart, which is the bucket that I was discussing earlier. Let's bring this and change it from the 2 minutes and put the 1 hour chart. And then you'll see what this is all about. So right now you're coming from already the top of the profile. This is the line I was telling you about, that this is turned out to be the top of the profile, which back tested from the European session into the US. And then it broke down. And the 1 minute and 2 minutes broke at the same time. It's not that one broke and then slowly the second one broke. No, they both broke at the same time. So that in itself is a significant event where in 1 minute both hit. And what did it do? It broke down to the pivot point, bounced back to the resistance of the swing arm, and then collapsed from there to the maximum level, 100% retracement into the zone 4 of the 2 hour chart. So, and I was posted on Discord, hey, pay attention to this thing is going to bounce, likely to bounce. And so it did, roughly, well, all the way to 31.53. Okay. And it happened. So when those of you that did short, but did not take a profit, and you see the swing arms going against you, and you're giving up all your profit, and you're still paralyzed and knowing what to do. Well, this is about red light, green light. Here you have the green. If you didn't short, if you didn't close when I was mentioning, hey, the 2 hour with 100% of the retracement of the zone 4 on the 2 hour chart, if you didn't close it then you should have closed when at least maybe the 1 minute swing arm broke against you. Because once the rubber band is expanded out this much, it has energy to pull back, and it did. So it was actually a pretty clear setup to take. If you were confused, you're probably pretty new at this. But some of those that have been here already for a couple of weeks have a pretty good understanding now. I'm actually quite impressed with some of them. So that's the one question that I remember that this fellow was asking. So why take this if the risk reward is so little? Well, I'm taking a zone 2 of the 1 hour chart. My target is going to be the 2 hour chart, not the 30 minutes or the 5 minutes or the 15 minute charts in the middle. The energy of a higher time frame chart is significant. It's going to take the little ones out the way on the way down to the next level chart. And that's what occurred here. So that's the only question that I remember. Let me see if there's anything else on Discord. I know. Yes, who is this?
Ishamia.
Hey, how are you?
Good, yourself, eh?
Good. So what question do you have?
Now, just on the same point here, I think the guy was referring to the lower time frames, and it was working against a higher time frame, sorry, a lower time frame of the 30 minutes. I think that was the risk reward um, that the guy was talking about, and I think he was waiting for to go long from the 30-minute bucket zone as the 2-minute was dropping down. So that was the risk reward that he was talking about.
Is that how you understand it?
Correct, yeah. So if you had to overlay a 30-minute chart, somewhere around that 10, 30, 11, we were coming down into a 30-minute bucket, which broke as well. So I think he was wanting to go long from the 30-minute. And I think that is where the confusion comes in as well.
Yeah, what you have to realize is that the energy of a swing arm, the built up energy is produced by the time frame is coming from. So if we're coming from back testing in a 1 hour bucket, that 1 hour is going to take out the 5, the 10, the 15 as it releases its energy. Remember as well that if we look at, and let's go back to the multi time frame and take a look at this. We have the 8 hour broke up, and the 8 hour had a significant damage to this trend line. Okay, so it would not surprise me that price eventually, I don't know when it will potentially come down here to test this trend line, and potentially even some of these zones of the 8 hour chart. So that's what you have to understand as you analyze the charts and see which is of the higher time frames, which one has been broken and which one has been back tested, which one has not been back tested. Because eventually in time they will be. So you must plan ahead and be aware of your surroundings, of the traffic that may be coming your way. So if we are looking at the daily chart, from the daily chart perspective, we have a downtrend. And we have a touch here, a touch here, and a touch here. So we had this discussion before. Okay, let's duplicate this here, and let's duplicate this here. So what's happening? We have a 1, 2, and 3 hit to the trend line, and price is rejecting the trend line. Why? Because that's usually the way price action works. It takes 3 hits and it reacts to the line. The 4th hit has the possibility of breaking the trend line in the opposite direction. So right now we're sending price back down. Who knows? It may even come here to 30.57, for example, from just looking at the daily chart. Let's look at the 8 hour chart, and 30.57 would bring us, could be around this trend line as well, which coincides with the daily, possibly. It doesn't have to go all the way down here. But all I'm telling you is that the probability is there. And that's what I'm looking for. I'm not looking to tell you what's going to happen tomorrow. I'm not looking to tell you the price is going to be, the market is going to go here or it's going to go there. I let the swing arms tell me that, not me trying to kind of get my crystal ball and say what the market will be. I just don't have that skill. But I can read this chart and I can see that we've been stuck at resistance from the day before, and then this thing broke down. That's the sale. That's all I need to know. We are in the resistance of the 1 hour chart, and this is triggering right from resistance. Short it and ride it until it dies or reaches my target. Which, how do you know what the target is? By reviewing the 6 grid. Let me take these things out because it becomes hard to see. So let me go back in here. and remove them from here. But let me lower the volume because it's probably going to be pretty loud as this bell, every time I move around, it will trigger the sound. So let's go back here to the 8-hour chart. The 8-hour chart broke this trend line to the upside. It broke the swing arm, and now it's on the way back to back test. This right here is the weekly pivot point right here, which there is an 80% chance that it will be tested during the week. It hasn't been tested yet. So tomorrow may be the day. See, so the basic pieces of information that over time you start to collect, and then you realize, well, you know, what are the how price usually behaves in relation to levels. Well, like I was saying before, the 3 touches, for example, is critical. We have it there, so I have a bias that this is likely to be rejected. It's not it was rejected on the first touch, attempted on the second attempt here, and then failed on the third. Okay, and now we're still stuck in this triangle. So this will take some struggle to get out of this. It's not easy, but still there's plenty of range to work with. So we'll just have to see how it plays out. So let's go back again to this chart, the 2-minute chart. So going back to the question of was there the risk reward? Yes, there was. And even if you did not see that there was a risk reward, okay, let's just throw that out the window. Let's only look at one chart. So let's just do this. Let me just go back and change this and only put the 2-minute. I'll change this to be just a 2-minute chart on both setups. So we only see one swing arm, so that we don't complicate things, because that's the problem, that we tend to complicate everything. So price is coming up from the European session into the US session. We get a zigzag pattern here triggering, and then right at 9:30 we get the sell signal. So you know you're coming from the 1-hour resistance, and there's a sell signal. If you did not take it, you allow it to back test, which practically back tests almost to the breaking point, and you short it, and you put your stop behind the high. Okay, if you short it at 30.62, for example, or 30.63.68, your stop should be $1 or $2 behind 31.70. That's it. And as this starts to collapse, you bring your stop to break even plus, and then you just sit back and let it wait and see. As long as the swing arms continue to be red to the downside on the way to the target, you stay in the trade. And then you should be placing your take profits at the target levels, not just waiting for it to bounce back against you. No reason to do that, unless you're looking to swing trade and hope that this becomes a much larger trade in the future. But from the day trading perspective, you entered at the zone and you exit at the zone. And you can re-enter in the opposite direction with the stop below the low. So that's the thought. I don't tell anybody buy here or sell there. I just don't. It's not my position to do that. My interest is to teach you to read what I see. You guys decide what you want to do. Okay, any questions?
Nope.
All right, so if not, then we'll call it a day, and we'll see what tomorrow brings.
Awesome. Thank you so much, Jose.
I'll go ahead and save this, and we'll catch up tomorrow.
Awesome. See you tomorrow. See everyone tomorrow.
All right. Bye-bye.